So whatever we will be doing here will be recorded. Okay. So the first thing what I wanted to show you is the Nifty Contra call. So Nifty Contra call gives me all the information which you will be seeing in the session. So basically this is going against the market. Okay, so whatever you are doing is against the market, against the current trend which is prevalent at the beginning of the market. That is what we'll be doing. Okay, so let me share my trading chart with you. Okay, so first you will have to see what how you have to buy and sell. First of all, when you'll have to buy and sell. Okay, so this is what the trend is. The market has started. So market has opened at 9668 and it went up to 9872. Okay, so this one, and afterwards it went really high. It dropped and it went really high. So what we are doing is we will be buying at 9664 or 9665 levels, and what we'll be doing is we'll be selling at the high point of time. So what we'll be doing is we will buy when it is a downtrend, and when it is negative, and afterwards when it is high we will sell it. Okay, so after some time it will settle down. You can see the trend that the market went really high. Okay, this was the trend of the market. The trend is high and negative the positive. So as soon as it opened, it went to a positive, and afterwards again started hovering in between those lines itself. Okay, so you will be buying a call when the market is low, and you will be buying a put when the market is high. That is what you will be doing in Contra. Okay, it has guaranteed 95% returns, 95% success rate every time I have traded with Contra. Okay, so this is on. This is the chart on 7th. Okay, let's check. Let's check what happened on 6th. Okay, so 6th. Okay, look at this. Look at this candle over here on 6th. Okay, so this candle is a high. The market started above 9,700. Very soon it fell so much that it went into negative. Okay, it has opened 9,670 to 700. 30 points above is what it has opened. About 32 points above is what the market has opened. So market opened and corrected. It corrected much more. Okay, so that is what is usually the contra trend. So basically it will go reverse as soon as it opens. Usually that is because this is proven that market goes reverse because most of the users who have been in profit, most of the individuals who do not have much of trading margins, what they will do is they will take the leverage calls. So the leverage call will be applicable only for 3 days. So they will take the leverage calls, and when they are in profit they have to liquidate it right away, because they think that if it is M to M, the market may go downer or may go upper, and their profit will not be realized. Okay, so that is what they do. As soon as the market opens, they want to sell it if they are in profit, and if they are in deep loss, they want to sell more. Okay, so that is what happens. So here, if it is a counter trend, if it is a positive trend, you will have to take a counter or prime end of selling it or buying a put. If it is a positive opening, you will buy a put. If it is a negative opening, right, as you saw over here on June 7th, yeah, this one right over here, it went higher and higher. Okay, and afterwards it went much higher. So what you'll be doing is, this contra is applicable only for first 15 minutes. Don't ever hold it more than 2 minutes or 3 minutes. When it is at the highs, just sell it off. Okay, so in a couple of minutes, when it starts, you will see a erratic move. Okay, that is when you will be buying. You have to keep on looking at the lows. Whenever it is almost the lowest, you have to put the trade. You have to buy at the lowest point. When it goes the lowest, you will buy, and afterwards sell it in the 2 or 3 more seconds. It will reach the highs. It will start giving you the profits. Okay, as soon as it opens, it actually uh, tries to give you the price at what it has opened. Okay, so if it goes in the other way, then it has to rise. So when it is at the low, when it opens, when this call is open, it is opening in negative, so the call will be down. So what you'll be doing is, look at the lows, and almost at the low point, you have to buy and sell it in another 2 to 3 seconds, or maybe 10 to 15 seconds. What you'll be doing is, you at least need about 3 to 5 points before you can sell it. So if you got the 5 points, sell it at market. Okay, however, you will never be buying at market rate. If you could not catch that day, it is okay, just leave it off. It is not your day, so just be it. Okay, never buy at market rates when it is open. So what will happen is, when it opens, there will be a huge difference between the open and the what is that, the bid and the ask rates. Okay, so when there is huge difference, you may buy it at higher rate than what it has opened at. So that you should not be doing. You should be doing it as and when there is a low which is ticking on the charts. Okay, so basically what I am trying to tell you is, when the market opens and you see that and you see that and you see that the market has opened in negative, you will be buying a call, right? So what you will be doing is, you will be checking the lows. So when it hits the lowest point of time, you will buy it. This is the lowest, 92.85. What you will do is, you will put a buy target of about 1.5 rupees above. uh, are everyone able to hear me? One of my students is not able to hear me actually. Audio lost. Okay, can you hear me now? Guys, able to hear me now? Okay, all right. All right, everyone is able to hear me now. So let's go further. Okay. Right. So basically, this is what I was telling you. When we are uh, when we are opening in negative, when the market is opening in negative, what you will be doing is you will be buying a call. That is, you will say that market will go higher. That is what you will think of. Okay, and you will take the trade accordingly. So now what you'll be doing when you are at the lowest, it ticks the low. There will be about 2 or 3 lows which will come up over here. At the second or third low, what you'll do is you will buy it at 1.5 rupee above this low price. That is when it is 1.5 rupee to 2 rupee above this. So if it is 92.85, I will put it at 94.50. Okay, so I will buy at 94.50, and within minutes what will happen is it may reach 100 or 105 as well. Okay, so that's what happens. It will expand its current opening rate, and it will increase in value as soon as the market sees there is a sell off, or there is a buy in the market. Okay, that is what happens. So when there is a contra scene, chart screen cannot be seen. Okay, I'm really sorry. I have not seen that the screen is not shared. Okay, so this is what it will be. When it is 92.85, you will be buying at 94 or 94.50 also. Okay, so most of the times you will catch up with the trade. About 90% of the times you will catch up. Some days is not your day. Okay, so you will see there is a low, and afterwards you will put a buy trade. Sometimes it never gets executed. Those are really fast days, and it didn't catch up with your speed. That's it. Okay, so you will just have to leave it and move ahead. You will start the scalp trading as soon as you lose this trade, or you uh, cannot execute this trade. Okay, so this works 95% of the times whenever it gets executed, and that is what we will be looking at as of now. Let's check the charts. I'm just giving you the live examples. This is no fluff. Okay, everything is live. What I'm showing, it is how the market has opened. It ended on 6th June. It started around 9665, and it went to the highs of 9675. Okay, when the delta is almost around 50.5 also. Okay, you will catch up with at least 5 points. So usually there will be a move of about 15 to 20 points. This was a low day. It didn't catch up too much. However, there will be 15 to 20 points move. Sometimes you will get 10 point profit right away in the contra trade itself. Probably on the day. I'll check how it panned out on one of the days. Okay, so let us go to my blog and verify what happened. So this is one of the days where I wanted to see if the contract trade went good for me. If it was not, so this is one of the days we will take into consideration and as an example as well. Okay, I want to give you live trades and live example. However, I will be trading on live days when the market is live, so I want to give you the live commentary of what is happening, and that is how I will be able to prove that this works, the contra works. Okay, so probably on this day I took a contra and I profited. I will check. Nifty recovered 10 points, smart recovery ITIL 9650. Okay, so seems Nifty. Okay, contra call 9650, call, buy at 95.35, sell at 87. Okay, so there was a negative and we cashed up on it. Probably um, this was a meager move, 96.36 to 96.24, only about 12 points. So I caught the trade somewhere around 85.35, so about 1.5 rupee is higher. I caught this trade and I sold it off at 87. So I saw that there seems to be something which is settling in the market. Okay, so sometimes it will go sideways, and at that time what will happen is your options trade will decay in its value. So I didn't want that to happen and go beyond my below my buy price. So what I did is I squared off at 87. Okay, this is what the trend is. It started at 96.36 and it went to 96.24. Okay, so this is the contra trade. So what I did, when it opened negative, this is negative, you can see over here it is negative. It has opened negative at this is the break even point. It has opened negative and it went more down, and I bought a call at this point of time, somewhere around this. Okay, so and I sold off somewhere over here. Okay, so this is the point when I bought the call somewhere around here and sold it off somewhere around here. And after this, check this out. This is what is the engulfing pattern, guys. So yesterday I taught you about the engulfing pattern, right? So what it does is it covers the previous candle completely. So it covers the previous candle and it goes ahead. So that is what is the engulfing candle. So this is the time when I sold it off. I didn't want to lose my profit, so I sold it off around this point. When it started giving a negative one, I sold it off, and afterwards look what happened. So it went more down. Okay, so usually that is what happens. Contra is always contradicting the market, right? You are always contradicting the trend. So if it is a negative trend, what happens? It will go ahead with the negative trend for some time, until unless it is a very hugely bull market. It does not have anything else other than this to do, that is take the market up. Bulls are in total control. That is when it usually moves higher. Okay, this is a bull market. However, the market has rallied about 300 to 400 points breathlessly. So on days when it opens negative, there will be some profit booking. So after probably about 5 or 10 minutes, there will be buyers who will start buying. Usually there will be buyers who are in sidelines. They want to buy when the market goes down. Okay, so that is when they will start buying, and this is what happens. So usually this has continued the trend. It opened negative, it stayed negative. I bought the call and I sold it off at the high point of the day. Okay, so afterwards the usual usual thing started. It caught up with the trend, and afterwards, after sometime it started bucking the trend, and it is going higher. Okay, so that is what happened. Okay, so this is one of the days. Okay, and let me show you another one. I want to show you the live chart of, okay, this is one of the days. Let me show you another one. Okay, this is the day. So I was talking about, I at this the contract trade, for the first 15 minutes it gave me 4 points high. Okay, so this is what I was talking about. The market opened, if you can see, or if you can't, I don't know. I have increased the size of it. Okay, so the market opened high, it went higher, and it sold off. All of a sudden it sold off. Okay, so this is the place where it opened. It went really high, and that is why I was telling you there will be about 2 or 3 lows which will show up when the market opens on the Contra. You have to buck the trend as soon as it is in the reversing zone, right? So when it is getting reversed, it usually may go up. So that is when you have to wait. You should not be buying at market, because if you buy at this point of time, and you want to sell it lower, then probably it may be a bit lesser itself because of the time decay. Okay, sometimes it will move helter skelter. So you have to see there is a low going on. After about 2 lows or maybe 3 lows, you will put a trade around this time. However, you have to be fast enough to catch this up, and um, it works. Okay, so it really works. So you have to catch up at this point of time, and afterwards sell it at the low point of the time. So this is a positive day. This opened positive. You can check it. The green line is not even nearby. Okay, so this is a positive day. It went more positive and afterwards got sold off, right? So this is where you will be squaring off. Around these points you will square off. So I told you Contra is 5, about 4.55 rupee, or 4.55 points which I have made. However, this is a sure shot one. Okay, and I showed you one of this, and let me show you another one as well. Okay, so this is what I showed you, right? This is the one. It went really low, the market sold off completely, and afterwards I made some about 15 points or so on this day. So this is one of the days when I made around 5 points on June 7th. Okay, on the day of May 16th, I made around 4.55. When it catches up, you will be in really huge profit. Okay, if it doesn't catch up, though you will be in profit, however you will be in less of profit. Okay, and this is sure shot. Usually this is what happens. So when the market is high, it will go low. When the market is low, it will go high. Okay, so that is what the Nifty Contra trading is all about. Let us go ahead with the notes. What I have. So let me share the trading strategy which I just gave you the examples, and let's see when it works. Okay, So short the market when there is a gap up soon after the market opens. Go long on market when there is a gap down. Okay, and do not buy it at market price. Always be vigilant and set the price, checking the lows of the day. Okay, I just give you a rhetorical number of 1.5 to 2. However, after you look into the charts, you look into the price movement. So what you'll be doing is you'll be looking at the charts, you'll be looking at the price movement when it is at the high point of the day. You will take a contra call and afterwards make money with the reverse of whatever is happening. Okay, so I just gave you a number of 1.5 points above the lows. However, it can vary. Okay, as and when you practice the paper trades, you will get to know that 1.5 is just a number. Okay, it can be at the lows of the day as well. Whenever, if it is at the lows of the day, there is a 50% chance you will catch up on the trades. Okay, if you take about 10 trades, uh, you will catch up on about 5 trades. So there is a 50% chance of you catching up. If it is above say 1.5 rupees of the lows of the day, you have 85% chance of catching up. Some days I already told you, some days are really fast, you will not be able to catch up. So just be it. Okay, so you will not be able to catch up 100% of the time in this, not even me. So I have practiced this for about uh, 5 years now. So it has not 100% of the day the time I will be able to catch up on the contra. Okay, so this is one of them. So if you can't catch up, let it be and go for the further trades. Okay, which I'll be teaching further. Okay, so contours of the strategy works really well if there is a gap up or gap down. Works well when there is a previous day negative or a positive trend all over the place, and today's opening is gap up or gap down respectively. So what the first point is very explanative. It does not require more explanation. Second point works well when there is a previous day's negative or positive trend. So what I'm talking about is when the market has gone low. Okay, so when the market has been negative the previous day and today there is a positiveness, it has a gap up opening. So what will happen is people who are stuck on the wrong side, they want to they want to clear off their positions. Okay, so they have taken a buy. They have taken a buy, and if it has a gap up, usually they want to sell it more. Okay, so the people who want the market to go down on the previous day, they will sell more. Okay, so if it is the buy which they will be taking, then the market goes lower, they want to buy again and probably have the market go in the way which they want. So the contra strategy, one needs to be very fast as the whole story might be over in a minute or so. Yes, Narendra, you have to be fast, and uh, that is when you will be able to make really fast money. Okay, so contra call, it works as I already told you. It works 95% of the time when you catch up. Okay, so I gave you about 2 examples now. I have been able to catch up on both the days. Okay, so if you are not able to catch up, yes, there are much more which you will catch by the day. So let this be and just move on. So works well when there was a previous day negative or a positive trend. Let us analyze that on the okay. Okay, so let me share the trading chart. Okay, what was I talking about is this. Okay, let's see what it means. Okay, so what was the trend of previous day over here? It is going higher, it is going lower. Okay, on 6th it went high, it went low, it went high again, it went low, it went high, it went higher, and it went low, it went low, 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 again higher, and went higher, and then it sold off again, it went higher, it sold off again, it went higher, 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 higher. Okay, so it sold off. Okay, so the previous day was a day of bears. Okay, whenever the market went up, the bears sold it off. Okay, that is what happened. So the previous day was of bears. Okay, so next day what happens? Okay, let us go with the information what I have given in the trading strategy. Okay, so works well when there was a previous day negative. It was a negative trend yesterday. It was a bear market. The bulls were not in control at all. Whenever there was a positive trend, bears just shed it off. They just footed the bulls and they went ahead. They sold at any positives possible. Okay, so the all the highs were taken lower. Bulls started the move and bears ended the move. That is what it is. So it was a negative trend yesterday. So what happened now? So there was a negative trend yesterday, and if it is opening gap up or gap down, you will have to verify. Okay, so it was a negative day. What happened is, it was a negative day. Okay, let me share my screen rather than the applications. Okay, right. So I have shared the screen. So basically, this is what you will be concentrating on. Works well when there is a previous day negative or positive trend all over the place, and today's opening is gap up or gap down respectively. Okay, so basically this was a negative day. It opened in a bit of negative and afterwards it scaled up. Okay, so when it is a gap up or gap down respectively, when there is a negative, what will happen is probably next day also there are some bears who want to sell off, and at that point of time what will happen, the market will go higher. So that is what is showing up over here. When there is a gap down, market wants to take it higher, and here previous day negative or positive trend all over the place, today's opening is gap up or gap down respectively. So this trend has taken a toll at this candle right over here at the beginning. So this negative trend they wanted to reverse it to the positive trend. So what they did is they took it to the higher point of the day rather than taking it to the lower point of the day. Okay, that is what happened, and works well when the market has a flash start and delta is not near to zero. So usually it works well when the option is at least 5 days from the previous expiry. So okay, so this is one thing which I have noticed, and at the start of the day of new month new month expiry, new month starting, usually the delta will be really low. Okay, so delta will be somewhere around point 1 to about point 3 or point 0.35 maximum. Okay, so at those days, usually about 5 days from the start of the month, after the previous month expiry of options, this contra trade will work 95% of the times. Okay, when it is the start of the day, the market may not move at all. Though the market moves, the option will not move at all. It will, if the market moves 10 points, it may not even move 1 point or probably 2 points. So you will not be making much money on the days when the expiry happens, and the next day till about 5 days of start of new month expiry. Okay, so this contra trade will work when there is some delta brewing, there is some volatility in the market. Okay, so over here, okay, I have given you examples. Nifty put, this is a contra call. The market went up, and afterwards got sold off, and I realized the profits. Okay, this is the second example. The market opened high, and afterwards it got sold off really, and afterwards this is the place where you will have to book the profits. Okay, so Nifty scalp trading. Okay, so we'll go to the next technique. So if you have any questions at all till now, you can ask me before I go to the next one. So I don't see any questions, so we will be moving further. Do we put contra call in first? Do we put for contra call in first minute itself? Abhilash, did you mean do we buy the contra call in first minute? If so, it is not just the first minute. It is as soon as possible. Okay, so as soon as the market opens, you will have to check the lows. In about 3 to 5 seconds, you will be buying it. Okay, so after you buy it, you will have to sell it. Say the market is going higher, you will be checking the charts, and when the market starts going with the trend, we are going contra trend, right? So when the market starts going with the trend, you have to buckle up, you have to start square off at market. Okay, so I will buy at limits and square off at markets, because you will not have time to finish the limit trading. Okay, okay, one of my student, okay, just 1 minute, I'll be back. I am getting a message that one of my student is not able to join. Okay, so let's welcome him on the class as well. Just a minute. Right. So what I was telling you is scalp trading is one of the most important techniques which will make you a heck lot of money. Okay. So that is one of the most important things which you are here to learn as well. Okay. This Nifty intraday trading is mostly about scalp trading itself, and the trend trading is next. Okay. Scalp trading. If scalp trading can make us about 30 points, trend may make us about 10 points to 15 points. Okay, so as well, a trend is about only 83% guaranteed success rate. If it goes wrong, you have to sell it at stop loss. Okay, scalp trading is the most important thing which will be making you consistent money, and money always, right? Okay, so let's concentrate on the techniques which will be looking at. So this is the ideal trading situation in an uptrend, and what it means by trade one profit 2 hour. So 2 hour is when it is a profit, it is a reward. When it is a loss, it is a risk. Okay, so you will have to understand what is the reward and what is the risk, and you have to understand that market may move this much, and only then you will take the trades usually. Okay, so that is what it is. Now I will be concentrating a bit more on 20-21 day moving average in the next next strategy. And now I will be talking more about the scalp trading. So what we'll be doing here is, okay, so as and when the market moves, okay, usually if there is a downtrend, or if there are continuous downs which is happening over here, and it reaches the point where it is 20 or 21 day moving average hits, and usually at that time it will take supports. Okay, that is one of the strategies of scalp trading, and there are Fibonacci series, all those things which will be coming up. Okay, so let us concentrate on 1 day chart, and let us apply all these things which we'll be talking in scalp trading. Okay, so this is how we will be drawing a Fibonacci retracement, right? So the market opened around this point, and it went down, and afterwards it went high. Okay, so let us concentrate on something over here. How will be scalp trading and all those things. Okay, give me one more minute, guys. I have a message again. All right, so now what I was talking about is there are ample techniques which you will be applying in the scalp trading. Okay, one of it is the Fibonacci series. The second one is the 21 day moving averages, and afterwards the third one will be the support and resistance zones. Okay, so these are some of the main things which we'll be applying on. So let us talk about the support and resistance to start off with. Okay, I have drawn the Fibonacci series. I have the 21 day moving averages. Let's start off with the support and resistance zones. Okay, so let us draw a trend line here. Okay, so what I told you yesterday was draw a trend line where it is it is not uh, you know touching anything at the top above this. Okay, only then the trend line makes sense. So there should not be any aberrations or anything as such. So over here it is the trend. It came near it. So this is the trend line, so which we'll be drawing. It is touching this line and it is coming back. Okay, so this is the trend line. So the trend line gives you information about moving ahead of what we currently are at. Okay, or it is the moving below what we are currently at. So it is the support and the resistance. When it is a support, if it moves above the trend line, and when it is a resistance, when it is below the trend line. Okay, this is what it does. So usually the market went down and it came nearby, it went down again. So the trend line is such a thing that even if it comes nearby, look at it over here, it came nearby to the trend line and afterwards it moved very high than what we currently are at. Okay, it came near to the trend line and afterwards moved higher. Okay, so the trend line is one of the most important things which you will consider when you are scalp trading. Okay, so when you will be taking a trade, when it is near to the trend line, and when it is taking support at the support zones, and when it is taking a resistance at the resistance zones, those are the times when you will be trading and when you will be scalp trading with the technique which I'll be teaching. Okay, so here we will draw the support zones. Okay, what you will be doing, you will be drawing the support zones. So this is one of the resistance zones. Always understand, there is no one point, there is one period support which will be possible. Okay, it is always the support zones. So this is a support zone. At this point of time the market went down, so it is a support when it comes down. Okay, I don't have to tell you anything now here. Check this out. So this is the resistance zone. Previously it went high and it went lower from touching this high point, and after some time over here you have a double bottom. Okay, it took support right over here and afterwards went higher. Okay, and afterwards it took a resistance at the zone over here and afterwards came down. When it came down, it tried taking the support. However, the market was taking it to the chin and afterwards it pushed much downer, and afterwards it took support at some point over here, right over here, because at this point of time there was a resistance for the market. Okay, and here if you draw a resistance line over here, it then became a support zone over here. Okay, so at this point check this out, how many times the market has hovered around this. There is a support over here, there is a support over here, and afterwards it went down, and afterwards it came down here. It took a support over here, it took support over here at the Fibonacci series, it took support at the previous resistance zone as well. Okay, support zones are the traders greatest asset when it comes to scalp trading. Okay, so supports gives you really good returns. When it hits the support zone, it will propel high and much faster. Okay, so it will not take much time. So when it took support over here, it went down, and afterwards it sprung up uh, very fast, and afterwards it stayed at those support zones. It took support again and afterwards propelled. Okay, so it swung up really high, and this is the time when you will be taking the trade. When the market takes support at the support zone, and afterwards it starts at a support zone, you will be taking the trade over here. This is the buy point, this is the entry point for your scalp trade. So you will take a buy at this point for a call, and afterwards sell it at some point over here at the high it did. Okay, so make sure that it is taking support. Okay, so it should not be like it goes down here, it didn't take support, it is going down, and again you take a trade. So make sure it holds the trade, and after it holds the trade, you have to take a buy and then sell it at the high point. Okay, that is what the scalp trading which you will be doing here. So support zones play a huge role. Okay, so draw these lines. See, check this out. This is a great resistance zone. There was a huge candle down from this particular resistance zone. Okay, this will be a resistance zone, and again, so this will be a resistance zone. Having support and resistance for you is very important. Okay, so this is one of the resistance zone. It took resistance at this point and it went down. This is again the resistance zone 96.60. Since the market has not gone that higher, so we'll not draw that. Okay, so these are the places where you will be taking the trades. Look at this, the market went low here, and afterwards it took support over here. Okay, so it went really high and it stopped over here, and afterwards it opened higher. So this is the place where you will be taking the scalp trade. You will be buying at market rate right over here. When it closes in positive, you will take a trade and afterwards sell it at higher zone. Okay, this is where you will be buying, and this is where you will be confirming that the market is going higher. Okay, and you have to sell it. Since this is a counter trend, this is a counter primary which you will be doing. So when the market is going higher, what you will do is you will wait for it to rebound. Okay, that is when you will be taking the trade. At this point of time, you have to, this is the ideal entry. However, this is not the confirmation what we have got. You have to wait for it to check that it has held the support for some time, and afterwards take a trade somewhere over here when it is going higher. Okay, afterwards it will go a bit higher more, and afterwards you will sell it off at a profit. And don't wait for a long time, it may decay more. Okay, if you wait till it comes down to this point, it will decay more. Okay, and this is one of the support zones. You will buy at this point when the market shows the confirmation that it has held the support. Okay, and afterwards you will sell at this point of time, somewhere around this. These moves will usually give the options about 30 points to 1.5 points. Okay, these support zones. So if you hold for a long time, if the support is held, then you will see more positive returns. However, you are scalp trading, so don't be waiting for long trends. Okay, so you will have to buy it and you will have to sell it when there is a change in the trend which you have taken. Okay, so when you are in contra, make sure that when the trend is bucked up, when it starts going downer, when you have entered the call, when it starts going downer, sell it. Okay, though it is at loss, sell it. So don't wait for it to recover and afterwards you will sell. Most important in scalp trading is you have to have the discipline of selling it when you are in loss as well. Okay, when you are in loss, you should not keep it. Though you are in loss, you have to sell it off. That is the mindset you have to have when you are scalp trading. You will catch up with much more positive trades, so you will have to sell this and catch up another positive trade. Okay, when you sell it, you will lose maybe 25 to 30 0.25 to zero point 0.3 points. When you make the money, you will be making about 50 to 65 to 1.5 points. Okay, so scalp trading is all about that. You will be looking for short-term bounces and you will be buying or selling. That is what you will do. Okay, so that is one of the techniques, buying at supports and selling at a high point. You have to make sure that the support is held and you will be buying and you will be selling at a high point. And the second technique which I'll be talking about is the Fibonacci series. Okay, so make sure that the Fibonacci series, okay, so quick roundup. Does everyone have trading chart? If so, please open it now and draw the Fibonacci series for the last one day. I want everyone to open their charts and draw the Fibonacci series retracement. So I don't want to be lecturing you and you will not be understanding anything. I want you to draw the retracement, Fibonacci retracement from the high point to the low point of the day on June 9th. This is the trade on June 9th. Okay. So please open the trading chart, trading software and draw the Fibonacci retracement from the high to low point of the day. Has anyone has anyone you know been unable to open the chart and draw because you are not having or not having the trading chart available or due to any issues? Do let me know. I will teach you right over here. I will still have the sharing, however, I want you to do it. So, okay, you don't have a chart, Mahendra. Okay, open chartinc.com on one of the browsers. Mahendra, I'm telling it to you, open chartinc.com, chartink.com. In the meantime, I'll open that as well, chartinc.com. Okay, so I have opened charting and you have Nifty over here. Select Nifty or type Nifty over there and select candlestick. Check the periods which I have here. Okay, If you have any moving averages at all, just take it off. Over here in the top you will have moving averages over here, right? So take it off. As of now you will not require it. I have it, however I'll retain it. I want to teach you guys, however you will not require it. Okay, so as of now we are talking about Fibonacci series, so let's talk only about Fibonacci series. Okay, so this is a monthly chart. I mean, this is a 6-month chart, and it is a daily chart which I'll be talking about. Since Mahendra doesn't have, I wanted him to draw the Fibonacci retracement and see how it is panning. Okay, okay, Mahendra, have you opened it? Is it open on your computer? Okay, so everyone, do it on your charts. Okay, so I have already given you instructions about how you will be doing it on your charts. Fibonacci retracements, draw that and from the low point to the high point of the day. Okay, so take 1-day chart and draw it from the low point to the high point of the day. Okay, I will be just showing one of the examples for Mahendra since he doesn't have it. Okay, Mahendra, this is what you'll be doing. Draw the chart from 9100, the lows where you see from 9100 to the high point. So the approximate high point is 9705, I suppose. So yeah, draw it till here. Have you done it, Mahendra? Has everyone drawn the Fibonacci retracements? Okay, Mahendra, what you have to do is you will have something like this. Something like this over here. You see Fibonacci retracement, the last option over here. Okay, what you will be doing is you will select this, draw it from the lows to the highs. Mahendra, when you say I'm not able to draw, what is happening? I can't understand. Okay, you have to be a bit elaborative. Let me know what is happening. Okay, everyone, have you been able to draw the Fibonacci retracement? Has everyone opened their charts and drawn a Fibonacci retracement? Okay. Okay. I see 3 yes. Okay, fourth one. Amit, are you on the call? If yeah, if yes, have you opened the trading chart and have you drawn the Fibonacci retracement? Mahendra, I hardly can understand what you're trying to do. It's not completely drawn. I am trying. What does that mean? Okay, so let's so whoever is able to open the charts, they have drawn it. So Mahendra, check it over here. Okay, I wanted you to do it. However, if you are facing difficulties, I can't actually help. So check whatever I am telling you here. Okay, so Fibonacci retracements is one of the greatest supports market can ever have. Okay, so when it comes near the Fibonacci retracement, usually it will take support. Okay, so or it will take resistance around those. When it is from the highs, it will take support. When it is from the lows, it will take resistance. Okay, so basically what we have to do is we have to draw this Fibonacci retracements from the high to the low point of the day. Usually it will be about 1 hour to 1.5 hours high to low, and as and when the market goes higher, you have to extend the charts. Okay, so when it is if we consider this as the high and lows of the day, when it bars this particular point, I have already told you from 61.8 till the end of the thing, you will be seeing the up move when it moves higher, than the Fibonacci chart. Okay, so those are the places where you will be taking the scalp trades. So basically what it means is, if it is going to the resistance zone, you have to consider this with the support and resistance. So when it is a support zone, it will take it. When it is a resistance zone, it will take the resistance and it may come down. It may not check the Fibonacci retestment right below it. It may go downer. Okay, you have to consider all those things before taking trades in scalp trading with Fibonacci retracements. It is 5:57. I am really sorry. We'll have to extend it to finish this scalp trading thing. Okay, so this is the point where you'll be taking the trade. So when it hits the lows, you will draw the up to down Fibonacci retracements or down to up Fibonacci retracements. It does not matter. What you will be doing is you will be checking the trend as and when it goes higher. Okay, so when it comes really down and afterwards it start moving up, what you will do is you will predict the markets as and when it happens. So when it comes to the first point and it takes resistance, then goes down, that is when you will have to draw this Fibonacci retracement. Okay, it it usually happens that the market starts a trend like this and it goes on with the trend. Okay, it may never retrace back. Fibonacci retracement is about retracing higher when the market is lower. Okay, and Fibonacci retracement is about market retracing lower when the market is higher. Okay, so that is what you will be looking for. When it is at the high, it has to go higher after it bars the Fibonacci retracement chart from 0% to the top. Okay, after from 0% to 61.8%, whatever is the difference, those many points it has to go up. At least those many points it has to go up. That is the usual norm. Okay, so retracement, you have to draw the retracements only when it takes support at some point of time. If the market keeps on going lower, or if the market keeps on going higher, and you say that you have drawn a Fibonacci retracement, it is totally not true. Okay, it totally won't work at that point, because Fibonacci retracement is about retracing at the lows and retracing to the top. That is what Fibonacci retracement is about. Okay, so don't, when it is continuing the trend, don't draw the Fibonacci retracement and wait for the scalp trade to work for you. Okay, it will never work. So you have to find out the high point of the day and the low point of the day. When it has taken support, mark my words, when it has taken support at one point and it starts retracing back, that is when you have to confirm that there is a retracement happening, and that is when you have to start taking the trades. Don't stand in front of a running train. You will be hit and you will be thrown away almost 20 kilometers away. Okay, so don't stand in front of a racing train. You should always stand in front of a train which stops and it starts going in a reverse direction. It's not possible literally, however, in terms of market, when the train stops, you have to uh, get in. That is when you have to buck the trend and afterwards start trading. Don't as I already told you, don't stand in front of a racing train or a racing river or anything like that. Okay, when it is flooding, don't stand in front of the river. So just rhetorical examples. Sorry for going way ahead. um, so when it retraces back, make sure it is taking support at those zones and afterwards start taking the trades. Okay, make sure it is going in the direction reverse than what you are currently seeing. That is when retracements, Fibonacci retracements comes into picture. Okay, now draw a Fibonacci retracement. Usually you will have to confirm it keeps on coming down, going up and afterwards coming down, going up and coming down. You will not see any so usually what happens, I will tell you one more thing. When there is a strong move in 2021, you will take the trades. Okay, so afterwards when you see that 2021 has a crossover and you see that market is reversing in a direction which you want, then you have to start drawing the Fibonacci retracement and start taking the trace. Make sure there is a confirmation over here. Okay, over here I'll show you. This is the point where I want a confirmation. Okay, I need a confirmation over here. If it stops over here, if it doesn't stop over here, it goes up. Yeah, it has happened many times over here in the tops. It has happened many times here. Check this out. It has come down. It took support, it went up, and afterwards it came down really hard. When the market has to go down, it will not go really down right away. Okay, it has to retrace. That is what is called as contractions and relaxations in the market. When the market has to go down, it will go up and go down, go up and go down. That is what has to happen. There is no downer or no upper trend which does not go down, go up or down. Okay, it is respective. So when the market goes down, there will be some upper candles also. Okay, so whoever is selling, some people will buy at that point as well. That is when the market is said to be market. So there should be buyers and there should be sellers. When there is people who are selling, there should be people who are buying as well. Okay, so that is when there is a change of hands. So that is what happens when you sell at market. What happens is there should be buyers at that point of time in the market. So that is when they will buy it. So what is the market bid, what is the market ask, it will sell at that point of time when there is a buyer at that point of time. So it may happen that you see that the market is somewhere around 87.15 and you will sell it thinking that it will go at 87.15. It will not go for 87.15. It will change the price because there is a market up move or a down move. And when there is a person who is buying at that point of time, your stock or your underlying asset or the options will be sold. Okay, that is when you will get the realization of profit or the loss as such when you sell it at market. Okay, where did I tell that? Okay, never mind. All right, so you have to understand that there is a retracement over here, and afterwards it is confirmation that it is retracing, and afterwards you draw the retracement. Once you draw the retracement, if it hits these points, usually there will be reversals. Okay, guys. So as I already told you yesterday, 91% is a very strong support. Okay, 91% is very strong support, and 76.4 is a very strong resistance. So is 61.8. Okay, 61.8 is also a very strong resistance. At this point, since the market was in a bull run, it went ahead of 61.8. Usually that is what happens when it is a secular bull run, and the market goes down, everyone wants to buy it. Okay, so when they see that there is a small uptrend happening in the market, everyone plunges in and they want to buy it at that point of time. After some point of time, there will be bears who are already selling. They will come in and they will afterwards uh, push the market back. Then it will start following the retracements over here. Check this out. It followed the retracement over here. It took the resistance here, went down, took resistance here, went down, and afterwards it has a very nearby support. So it is taking the support right over here. Okay. So that is what I told you. Support zones are very important for scalp traders. So when it hits the support zone, it will get propelled higher and much faster when it is at the support zones. It may take support right away, or it may take support in the next candle also. Okay, sometimes there will be a bar of support just like this. So it took support over here, it didn't go really high, low, it went really low, afterwards it came back above the support zone. This is where you have to see that market is taking support at this point, this zone. Okay, I already told you there is no certain period that this is the support for the market, that particular number is not prevalent. Okay, there may be about 5 points here and there, so that 5 points you have to wait for, that the support is being held, and afterwards take the trade. Okay, so the Fibonacci series 91%, when it comes to 91% and it shows that there is a move up, then you will have to take the trade. Okay, so buy at that point of time. When it takes support, buy at that point, and afterwards wait till the market shows you negative. There will be one or two negative which will be coming. However, if it is a huge one, then sell it off. Okay, here at 91%, what you will be doing is you will wait that it held the 91% support zone, and afterwards it is moving higher. When it moves to the 85% zone and it is going higher, then buy. Okay, and buy and wait for the zone until it reaches the 76.4%. When it takes a tall at 76.4%, sell it off, and don't wait for the next candle to move higher. Okay, so sell it off. If it takes support at 76.4, then wait for it to move a bit higher, and then always keep in mind that resistance and support zones should be merged with Fibonacci retracements and then traded. Okay, there is a huge resistance over here. You have to make sure that when the market is taking a big retracement from such a level and it is not stopping at those retracement levels, then you have to sell it off. Okay, you have to make sure that you sell it off. Okay, this is a negative zone. It took a retracement from 91%, it took a support and it went to 76.4%, and afterwards it took resistance. It could have gone to 61.8%. However, it did not, because it took some resistance at this point of time, 96.35, and afterwards it came back to 85.4%, and it took support and went higher. Okay, so these points, 91% and 76% and 61.8, it is either support zones or resistance zones. When it is a lower, it is resistance. When it is higher, it is the support zones. Okay, so you have to take the trades accordingly. Look at this. So it went above this 76.4%. It took resistance over here a bit, and afterwards came down. It took support at 76.4, and at the same point there is a 20-day, 21-day moving average as well. It took support right over there also with the Fibonacci retracement. It took support and afterwards it went higher. Okay, so this point, if it takes resistance at 61.8 for about 2 candles, and those candles are high or big, then sell it off at 61.8. If it doesn't, then wait until it takes a resistance higher. Okay, so when it takes a resistance higher, sell it off. Scalp trading is all about that, buying and selling, buying and selling. Okay, there is 91% line in the Fibonacci. There is no 91% line in Fibonacci. There is probably, if it is a small chart which you have drawn, 91% is not that much easily visible. You can check it over here. I am showing you the 91% over here, Pradeep. I suppose it is Pradeep. It is showing waiting for name. Is it you, Pradeep? Okay, yes, it is Pradeep. Okay. All right. So this is what is 91%. Check it out. So this is the ellipse which I am showing 91%. Okay. So this is what I was talking about. So 91% is a huge support, and 76.4 is a big support. So is 61.8%. Okay, so this is a big support as well. So though it crossed it, I already told you there is not exact zones where it will take support. Usually it will hover. When it is barred, it will go downer and take support. Okay, so around these 61.8 support zones, at what time should we draw Fibonacci retracement? Narendra, as I already told you, when the market is falling, or when the market is going higher and it retraces, it touches the high or it touches the low and it retraces, it is moving higher or it is moving lower, that is when you have to draw the Fibonacci retracement. Okay. So don't draw a Fibonacci retracement though the market is going lower and lower, or market is going more higher. Okay. Okay. So yeah, I was talking about the Fibonacci retracement. Yeah. When it hits these levels, do take the trades, and when it is having a reversal of the trade, do sell it off. This is the way you will be making money with respect to the scalp trading. Okay, so I'll be teaching you another one. Always guys, Fibonacci retracement should always be uh, you should always consider support and resistance zones with the Fibonacci retracements. Okay, support and resistance plays a big point when it is in the market. So you have to keep support and resistance also in your eye, in front of your eyes. Don't ever blind yourself for support and resistance zones. You have to draw as many lines as much possible. You can zoom it anytime. Okay, you can zoom it to any point of zoom as much you want. However, you have to draw the support and resistance lines over here. See, check this out. This is a huge resistance zone, and this is a huge support zone. There is candles which have emerged from this line. So if I draw a trend line from here, what happens? What is happening? I am not able to draw. Okay, so check this out. So I am drawing a trend line from this line down. Okay, and this actually happened to be a resistance zone. This happened to be a support zone. How is that possible? That is because the previous supports will be resistance and previous resistance will be supports. Okay, so Fibonacci retracement should always be mixed and matched with the supports and then be traded. Okay, look at this. There are about two trades over here happening, and okay, so this is one of the place where the market changed the direction. Okay, right over here. Why was this? Because there was a support at this point, now a resistance, right? So it has played both the zones. So I already told you there is resistance zones and support zones, not a exact number to keep in mind. Okay, so this is one of the resistance zone, 9645.5, I suppose, and this is one of the resistance zones, probably somewhere around 9644. Okay, so this is a resistance zone. This is a resistance zone. Check this out, how much it has influenced the market move over here. Okay, so when it hits the resistance zone, do take a trade, do buy a put. Okay, when it hits the resistance zone and it moves high, moves lower, do buy a put. And when you buy a put, make sure that you wait for the market to show some trend in that reverse direction when it moves, and sell it off. Okay, when you see that there is cancellation happening, um, when there is cancellation happening, I am looking, okay, so something like this. Okay, so over here something like this happens. So there is a big red candle, and afterwards there is a cancellation of this red candle. It emerged almost near to this particular red candle, and it means that there is possibly a cancellation happening over here. Look at this. This zone, it it went up and it went down. Do you remember what kind of a candle was this? Yesterday we were talking about the tweezers. Do you see that it is almost the same? So, as and when you go through the candles, you will start. Yes, yes. So there is the body is almost equal. There is a bit of wick over here, there is a small down here. However, there is almost the same thing which is happening over here, right? So after this, what happened, when this means that it is a cancellation pattern. Okay, so it started a green trend, that is a positive trend. It took it lower. The market took it on the chin. It almost came as much as the positive, and afterwards it went down. Okay, it took support at 91%, and afterwards it made a move higher. Okay, so you have to keep all these things in front of the eyes. Whenever it happens, these are the zones when you have to buy a call. Okay, in these zones you have to buy a put. I will be buying a put over here, and afterwards see if the market goes to the positive zone, and after it goes to the support zone, I will sell it off. I will be buying a put at this point of time when it is a cancellation pattern. Okay, and afterwards sell it off right over here. Okay, so what happens next? So this market went higher after this cancellation, and after taking support at a lower zone over here, what happened? The market went down, it started selling off again, and afterwards there is one more candle which is kind of the same as the tweezer, and it propelled the market higher. Okay, it came almost as much as the red candle, the previous red candle, and afterwards made the market move higher. Okay, as well there is a support zone of 85.4% as well. So it took support around these levels. So once it took support, it moved higher than 61.8% as well. It took a bit on the chin right over here. It went higher and afterwards it went down. Again, it started above 61.8. So it took support at around 61.8, 78.4, sorry, 78.4 again, and afterwards propelled higher, and it went above 61.8% over here. Okay, it took resistance at the resistance zones, the huge resistance zone. This is a very huge resistance zone. That is because the market has started a trend around this line. Okay, so you have to keep all these things. So draw as much supports and resistances as much you want, and that is what keeps you making money. Okay, so this is what scalp trading is all about. So this Fibonacci retracement you have to consider when it is not really near to the support or resistance zones. Okay, so when it takes support, though it is not a Fibonacci retracement level, it will take support. Okay, something like this, it will take support and afterwards move to the Fibonacci retracement. Probably it may take resistance, or probably it may move higher. Okay, because market has to move at some point of time, so it does not keep on moving between resistance to support and resistance to support. Okay, so after I already told you, so you have understood a bit about how to buy a put and how to buy a call. Okay, so when it moves really higher and it starts a low trend, okay, usually, and it has one more negative candle, it means that there will be a bit more sell in the zones. Okay, at that point of time, buy a put and sell it when the market trend is changing. It takes a support around the support levels, or the market is changing again right over here. Okay, so the ideal condition is you will be buying a put somewhere after the confirmation that there is a negative candle which will be coming up in the next one. Okay, so this second candle is a confirmation that you will be buying. Okay, and afterwards you will be buying a put, and afterwards you will sell it at the lower point of the time, right? So that is what you have to do. And when it comes to the support, you have to take a positive trend, and when it is moving higher, you have to hold a bit and make sure that it is candles like this, a red candle, it will be a bit sometimes devastating. It will give you a reversal as such. However, in this point of time, there is a positive candle emerging right after the negative candle, and this is a confirmation that it is a cancellation of this particular red candle. Okay, this is an engulfing candle. It means that it is a start of negative zone. However, this positive gives confirmation that the high trend which it has started will be intact as such. Okay, so afterwards it came down and took support around the 20-21 day moving averages. Okay, that is the next one. So at this point, the resistance, make sure that the resistance is held by the put and sell it at the lows. Okay, that is the scalps. Again, it came to the resistance zone. If it bars this, make sure that it holds the support zone and buy a call at this point of time and wait for the higher highs. Okay, and when it takes a resistance over here, make sure that you buy a put over here and wait for it to move lower and take support. When it takes support at some point of time, make sure you sell it off. Okay, so at some point it will take support, you will sell it off at that point of time, right? So this is an ideal situation that you will face. You may not have the confidence that it may emerge in such a negative candle. So probably at some point you will sell it off. However, you will still not be at loss. Okay. At this, when it comes near the Fibonacci retracements, it may take support. So wait for the next resistance to sell it off. Okay. And afterwards, support zones, make sure the support is held and then buy a call. Okay. Sometimes it may not move. It may move in a sideways direction, and afterwards it may move upwards or it may move downwards. If there is a time decay, sell it off as well. Okay, sometimes the market will decay the price, though Nifty will go up, your option may not go upper. Okay, because there is a time decay happening. So these are the places where you'll sell. Sorry. Okay, so the next technique which I'll be talking about is the 20-21 day moving averages. Okay, I've already told you 20 day EMA close of Nifty is what we'll be considering. 21 day EMA open of Nifty is what we'll be considering. Okay, so now open your trading chart and draw 20 day closing EMA and 21 day open EMA. So I will be opening. So this is the close which I'll be drawing about the exponential moving average 20, and this is the open exponential moving average of 21. Okay, over here I'll be drawing the same thing. Okay, has everyone drawn the 20 and 21 day moving averages? Okay, Indranath has drawn the 20 and 21 day moving average. Pradeep has drawn it as well. Guys, a bit faster. I am looking for answers faster. Amit has drawn it. Okay. Okay, Narendra has done it. Okay. Great. Okay, alright. So what I'll be doing is I'll be clearing off everything now and will only concentrate on 20 and 21 day moving average. Okay. Pradeep is asking which order we place, market, BO or CO. You will be buying at market. In case of scalp, you will be buying at market. You will not be able to catch up the limit every time. Okay. So when does 20 and 21 day moving averages come into picture? Okay. So let us draw the trend lines here. So check this out. This is a big one. Okay. And this is a big one. And this is a big one. Okay, right. So there is one more question. Okay, right. So when we'll be considering this is with the supports. So this is already there. Yeah, the market is showing a negative trend around these zones. Okay, so there is one already there is one already here, this is the one. Okay, so there is resistance over here and there is resistance over here, there is resistance right over here. Okay, so let us consider the 20 and 21 day moving averages. All right, so when will we be considering the 20 and 21 day moving averages? So we will be considering 20 and 21 day moving averages when there is a strong reversal happening. Okay, so how do we consider that it is a strong reversal? It is moving higher from one of the strong support zones, that is, check this out. Okay, it is moving higher from one of the strong support zones. That is when we'll consider 20 and 21 day moving averages into when we have to scalp it, right? So huge ones, right? So this one, it rose almost about how many points? So it rose from around 96.08 levels till 96.35 levels. Okay, so not 96.08, it is 96.18 levels. Okay, it is somewhere around 96.20 levels till 96.35 over here. Okay, and afterwards it came down. So this is one of the huge resistance zones. Okay, if it has to happen. So if the market goes higher than this resistance zone, what happens? The market will take support at the 20 or 21 day moving average if it actually has to come down. Okay, if it is going above this resistance zone and the 21 day moving average is nearby, if the market has to come down right away from these support zones, then the market will take support at 20 or 21 day moving averages. Understand it? So the price action is important over here. You have to understand that. So when the resistance zone and 20 and 21 day moving average is nearby, when the resistance zone becomes support zone and it is barred, and it has taken support around the 20 and 21 day moving average near the resistance, and it went up, it means that it may take support at the support zone itself, or it may take support at the 20 or 21 day moving average when it bars the resistance zone. And at this point of time it is hit by another resistance zone, it came down. So over here what you will be considering is this resistance zone is very much known for us, right? So this is the resistance zone which we very much know. Okay, so this resistance zone is already known for us, so we have drawn the resistance zone. When it moves, when it shows a big move from the resistance zone and a 20-21 day moving average is following, it is in the positive. When it is moving in the moving ahead of the resistance zone, usually if it comes down probably to the resistance zone, which was a resistance zone or the support zone, it will take support either at the support zone or at the 20 or 21 day moving average. Okay, look at it over here. This is a very clean example. So it takes it, this is a huge resistance, right? Okay, it comes down below these resistance zone, this support zones, and afterwards tries taking support at the previous support zones, right? So it tries taking support at the previous support zones, and afterwards, oh, okay, so it tried taking support at the previous support zones, and afterwards it went above these resistance zones, and 20 and 21 day moving average is showing a convergence in the market trend. Convergence means that it is showing a change in the market trend. So all this time it was coming down, 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 it went downer, and it crossed the support zone, and 20 and 21 day moving average is showing convergence around the support zone, all right, around the support zone, and there is huge moves around these support candles, resistance candles, and resistance is barred. It came back to the support zone, or it came back to 20-21 day moving average, it took support and afterwards propelled. Okay, this resistance zone is barred, this 20-21 day moving average is barred, and 20-21 is showing a convergence, and the resistance zone is now becoming support zone. It went ahead of the support zone. It either takes support at the support zone itself or comes back to 20-21 day moving average and then propels. This is the ideal situation for any scalp trade. Okay, when it is barring any resistance zone and 20-21 day moving average is very nearby, it takes support at that point of time and it propels higher. Okay, so buy at this point of time when it takes support at 20-21 day moving average, when it is near the support zone, buy it and hold for some time. Probably this is ideal condition. Okay, so over here let us take the reverse of it, what I was talking about. Over here let us zoom in a bit. Over here there is a huge resistance. Okay, there is a huge resistance over here. Huge resistance This one went really high. It has a very big body. It has a huge wick, and afterwards it went to this particular zone. Check this out. There is some resistance at this level already, and the market is taking on the chin. There is a reversal at this point of time. There is the red is below the white. That is the 20-day close is below the 21-day close. Market starts coming down, and this is the resistance zone. It crossed it. What it does, so it started over here, it went really down, and afterwards came back. Okay, came back and checked out that there is a 20-21-day moving average right over there, that when it is down it will be a resistance, when it is up it will be a support. Okay, when it is at the resistance zone and the market is showing a convergence of breaking down, it means that it will take a resistance at the 20-21-day moving average, and this is an ideal zone for scalping. Okay, so sell at this point, that is sell the market. It means you will be buying a put. Buy a put at this point of time when it takes support from when it takes resistance from the 20 moving average and moves lower. Okay, just over here you will understand that it may take support right at the resistance zone. It may take resistance right at the resistance zone, or it may take resistance from the 20 or 21-day moving average around this resistance zone. This is what I was talking about. Okay, so this is the ideal situation for scalping. This is the ideal situation for selling in case the market is falling. Okay, this is the ideal situation for it to buy when the market is showing a reversal condition. So when there is a reversal showing up over here and it comes near the support zone, it is a support zone, it propels higher than the support, and 2021 is nearby, and over here it takes support at the support, and it comes a bit downer as well. It takes support at the 20-21-day moving average as well, and then propels higher. Okay, so this is the ideal condition for scalping. So buy at this point, buy a call at this point, and wait for it to move a bit higher, and when you see a red candle starting, sell it off. Okay, that is what is the ideal situation for scalping around these levels. Okay, so now what happens, it is almost near to the resistance zone. There is the 2021 is far away from our zone now. Okay, now what happens, this one, it has taken a chin very much right over here. This again is a resistance zone, guys. Okay, this again is a resistance zone, and as well this is a resistance zone. This is a resistance zone. Okay, it came really higher over here, it went down. Okay, now it took support right over here, and afterwards it started going down below the resistance zone. And check this out, that there is a reversal right over here. You can very clearly make it out. Okay, right over here there is a reversal here. Okay, check this out. So here you see a reversal of sorts. Red is all over the place above here, and all of a sudden there is a red candle, there is a second red candle, the third red candle near the really big resistance zone, and afterwards market is going downer. It goes below the resistance zone. There is a trend change in 20-21-day moving average, and it comes to the 20-21-day moving average, takes resistance very near to the resistance zone, and afterwards goes lower and really lower. Okay, So when you start seeing a green candle like this, sell it off. Okay, so you don't have confirmation that it may not reverse. Okay, it may go downer, we don't know that. Okay, when you start seeing green candles like this, sell it off. Okay, you will see green over here as well. However, the open and close is what it means, you have to sell. Okay, so green candle means that it opens lower and closes higher. Green candle, so you should not be selling it right over here when it is at this point. It shows a green, a bit of green, and afterwards goes downer. Okay, wait for the close of the candle and then take a call about selling. So all these trades you will be doing it at market levels. Okay, so there is a trend change over here at the resistance zone. It may come to the resistance zone and take resistance, or come to the 20-21 day moving average where there is a trend reversal and go down. Okay, and really down. All right, so let us take more examples. Okay, right over here it is a support zone over here. Okay, so it comes to the support zone, there is a small trend showing up over here, there is a trend change over here. Okay, oh sorry, I took a trend line. There is a trend change over here, there was a trend change here. uh, Check this out, the trend went down and afterwards it came up. Okay, now this is the support zone. It may come back to the support zone, take support, and then move higher, or it may come back to the 20-21 day moving average and then come back. Okay, so this one right over here, it took support at 20-21 day moving average, it is the resistance zone as well, and afterwards it took support, it went higher. Okay, how much higher? If you had bought at this point of time when it opened, it went from 96.42 till 96.42 till 96.45 zones. Okay, around 3 points. So you will have had at least 1.280.8 points profit in this point. Okay, after if you had bought it at this point of time, it took support around the support zone and 20-21 day moving average. There is a reversal in trend over here, and afterwards you will be seeing positive candles. Okay, that is what is this is one of the strong trends where you can buy, and it came back to the support again and afterwards it went higher. Okay, so when you see red candles like this, sell it off. Okay, it is not good to risk yourself that it may come over here and take support. However, you will never know that if it is taking support or not. Okay, so sell it off when you see red candles. All right, and over here near to the support zone, market just showed one more reversal of sorts over here. Check it out, there was a negative reversal and afterwards it took a positive stance, and it is near to the 20-21 day moving average. It is above the support zone. Buy it after this and sell when there is red candles showing up. Okay, if you had bought it over here, you would have sold it over here, and after it closed, if you had waited, you will have sold at a profit, much profit. Okay, so this is one of the conditions. And support zones, when it is near the support zones, wait until when it is near the resistance zones, wait until there is confirmation that it is holding above the resistance zone. So it happens that there is resistance zone and afterwards the market may come downer. Okay, so you have to wait to confirm that it is taking support around this. So it came up here, it closed above this resistance zone, it took support over here, and afterwards it went higher. Okay, rather over here this it was not the case. It went high, it took support over here, however it took it on the chin and went below the support zone. Usually, as I already told you, support zone is not an exact number, it is a zone. Okay, maybe 2 or 3 points below this also is a support zone. So it went near the 20-21 day moving average and afterwards it took support and came back. Okay, so there will be ups and downs, so you have to wait for the candle to close. When it is a red candle, then you have to sell, and when it is a green candle, I mean in a uptrend, if you are buying a call, when it is a green candle and it is a confirmation, buy it, and when there is a red candle, bearish signal, you have to sell. Okay, that is what the scalp trading is all about. So you have to keep on looking at the support and resistance when it will pan out, and take the call or put at that point of time. Take a call right at the instance when it is happening. Okay, you will not wait for the instance to go away. Okay, I know that some of them are professionals who are working uh, in 9 to 6 jobs. However, you can verify these candles by drawing the supports, resistance, and Fibonacci series and 20-21 day moving average. If you merge all of them, your scalp trading will be greatest. Okay, so you can start observing from tomorrow itself that there is some movement at this point of time. 20 day moving average is crossing the 21 day moving average, either down or up. Okay, start making the charts and start taking paper trades from tomorrow onwards and see if you are making any progress on this. There is support zones, there is resistance zones, there is Fibonacci series which you have to draw and understand, and that way you will be okay. So let's draw Fibonacci retracements. Yeah, Fibonacci, let's draw Fibonacci retracements also. It takes support at Fibonacci retracements right over here. Check this out. It is taking support. So retracement comes into picture when there is a high and low. Okay, we have drawn till here. So we will be considering over here. So it took support and afterwards it went higher. It went higher to the 76.4%. It came back to 85.4%, then 91%, and afterwards took support and went higher. Okay, so afterwards how much it went higher, you will see there is a resistance around this particular point, and afterwards it came down, it came to the level almost near to 91%, and afterwards took support. When it is taking support, buy and make sure that you hold until it is reaching the next resistance zone. Okay, when it is barring this support zone, sell it off. Okay, when it is taking support at the Fibonacci retracement levels, buy it, buy a call, and wait till the next resistance zone and sell it. If it is moving higher than the resistance zone, wait and sell it at the next resistance zone or near the next Fibonacci retracement level, that is 61.8, somewhere around here. If you had bought it somewhere around this point, so around this point you have bought it. So there is a support at this point. it opened lower, it went really high, it took resistance around 76.4, it still held this 85.4% resistance at the support zone, and afterwards you'll buy it and wait for it to move till the next resistance zone. Don't sell it off when it is in between. Okay, don't sell it off when it is in limbo. Move till the next resistance zone, move till the next resistance zone, check if it is still taking resistance at that zone. If it does not, wait for the next resistance level. If it is taking resistance at that level, sell it off. Or if it is still below if it still can take support from this particular resistance, this support level, as it has crossed this and it can move higher, hold it, okay, until the next resistance zone or till the next support zone, or till the next retracement level, and sell it. That is the strategy you will be taking. Okay, when it is near to the support zone and 2021 day there is a reversal in a trend, as such over here it is very near to the support zone as well, and you can take this kind of as a sure shot. So this is a support zone, it is above the support zone, so it is a resistance for this candle, it is a support for this candle because it is above. So you will take a trade around this, it is taking support at the support level, or it may be taking support around the Fibonacci, no, not the Fibonacci, at the 2021 day level, around here. Okay, so around here, so it is taking support and it came to the 2021 and afterwards it went higher, right? So probably we were talking somewhere around here. Yeah, here there is a small change in the trend. Okay, there was a bit negative trend and afterwards it went positive. It took support at the support zone, that is the Fibonacci retracement level 76.4. It is around the 2021 day moving average, that is the 20-day moving average is above, it is taking support, it is moving higher, and afterwards there are some small candles. Wait till it reaches the next resistance zone, and if you are sure that it is moving down from the resistance zone, sell it off. If it is not moving down, wait for the next resistance zone, either the next resistance zone or the next resistance zone from the Fibonacci retracement. Okay, next to Fibonacci retracement zone. Fibonacci retracement zones are the resistance levels which usually markets will take it on the chin. Okay, when there is resistance levels and it is taking resistance, sell it off, right? Okay, so that is the techniques. So when it is taking resistance, make sure that you sell it off and you're sure that the resistance has held and the market is going really down and there is a change in the trend and it is taking resistance at the 2021 day moving average, then sell it. Okay, so sell it, and if it takes support around the support zones, then I mean sell. When I say sell, you have to buy a put and afterwards sell it for profit. Okay, when the market goes down. So these are the scalp trading techniques. uh, so next class you will be learning about the trend trading. So if you have any questions at all, I am here to take. It's already 7. I'm really sorry, due to some issues we had to extend it for almost 1 hour. I'm really sorry for that. I am ready to take questions. Please throw the questions. This is important. I suppose you understand, and I suppose you practice it on a regular basis. Okay, so please ask the questions if you have any. Mahendra, you have to. Paper trading is just an acronym. Okay, start, open a notepad, uh, put a buy or sell around these zones. Okay, what you usually have to do is when you are totally concentrating on this, you will have a chart on one of the monitors. You will take a buy when you are paper trading. You will have the software where you will be buying and selling on the next screen. Okay, on the next screen itself you will take buy and sell. Okay. Yeah, market orders are risky. We do not know at what price it will happen. Okay, so what you will do is, yeah, market orders are risky. Okay, however, when you are scalp trading and when you have sure short calls, you are sure to make money. Okay, so I have been trading in market orders for about 4 years now, and I have been consistently making money. So over here, okay, let me show you my okay, my blogs. Yeah, Pradeep, I will show you the examples of live trades which I have taken. Okay, so that way you will understand uh, why market or yeah, though market orders are risky. Okay, so this one is lower. Okay, so over here, uh, I bought it at 98.35. I sold it at 102.8. Okay, and when I buy it at market, okay, so when I buy it at market, only then I buy fast up move. Okay, if I am placing a limit, it may never happen. Okay, you have to keep on waiting and you will never know that if it will be taken or not. It is risky, however, you have to take a risk to scalp trade. Scalp trading is all about that. Okay, you will be risking, however, you will be risking with market on your side. Okay, when you see that there is a strong trend which is emerging, you will buy at that event and afterwards sell it for a profit. That is what the scalp traders always do. Okay, you can't wait for limit orders to execute. I had a high risk limit order, a stop loss limit order triggered. um, it got triggered at 49. The market went really high. Okay, and one of the stop orders got triggered at 49 and I sold it for, yeah, check this off, my stop loss buy got executed for put at 49 at 96.50, sold it for 50.2 in hurry. Okay, so you will be taking fast trades and only then you will be making money. Okay, it is risky, you do not know at what price it will happen, and yes, of course, you will be risking that, and that is when you will make money. Okay, when a trend emerges, the market will reward the option. Okay, so no matter what happens, if you risk, you will get the reward from the market. Okay, that is what this trend is all about. That is what scalp trade is all about. You can't catch up to limit trades when the market is moving higher. Okay, can we use ambi broker to practice? Yes, you sure can. You sure can use ambi broker. You sure can use I will help. I suppose it is better you take paper trades as of now. Okay, because paper trades, at least you will be faster. Okay, so that way if you can see it faster, you can trade faster after you start the demo account. Okay, if you start a demo account right now, if you don't see it fast, you will not make money fast. Okay, so first do paper trades. That is because at left side you will see there is a trend emerging on your you know in on your monitor, and afterwards on the right side you will go, or maybe the vice versa, however you want. Okay, on the right side you will go and buy the call or put which you are looking for. Usually it will be F1 or F2 for buy or sell. Okay, so just don't keep on right clicking and afterwards go for buy and afterwards go for sell. Okay, there will be F1 or F2 when you have to buy and when you have to sell. Okay, just click that button. You should have it right at the fingertips. So when you are on the left side, you will always have F1 or F2 in the fingers of your left hand. Okay, I have a big problem with IAFL TT website. The chart is never stable. Am I doing something wrong? IAFL TT website? Oh no. Pradeep, you will never be able to check anything on website. Okay, you have a software. I am using a software of IAFL itself. Check this out, IAFL trading terminal. Okay, go to their website and install it. Just install IAFL TT and reset the password. Okay. Okay, so next question from Narendra. So we have to decide on resistance and support. With resistance and support lines, Fibonacci retracement, 2021 EMA, any preference between the three indicators? I prefer everything, Narendra. I prefer a mix of everything, mix and match. Okay, so when the, check this out over here. Over here, the Fibonacci retracement line is here. There is a support line over here as well. Okay, I have drawn a support line over here as well. Where was this? Yeah, around 90, 50, 38.2%. Okay, so around 38.2%. I have had multiple resistance zone over here. Okay, I have drawn a support. I have drawn a resistance line over here, and afterwards we move ahead, and 38.2% is now a resistance zone. Okay, now when it comes to resistance, if it holds the resistance, you have to sell it, and at some point of time it comes near to the 2021 day moving average. It will take support and afterwards it will move higher. Okay, this resistance zone, which was previously the resistance, it becomes a support now. Okay, the 2021 day moving average is an uptrend as of now. It has not changed the direction, so it means that the market is an uptrend. However, there will be small downs as such. Okay, the resistance zones will be hit, and when resistance zone is barred and it comes near the resistance zone, it is near the 2021 day moving average. It is at the Fibonacci retracement level. This is a zone where it will come nearby, and afterwards it takes support and it moves higher. Okay, so this is a mix and match of everything. Okay, so when everything is nearby, it is ideal zone. Uh, you will have greater success rates at that point of time. Can this scalp trading strategy be used to trade futures as well? Absolutely. I think I gave it, however, I'm not sure. I bought a future trade for, and I booked it at 3 points. Not sure how to search for it. However, I bought a Nifty future, not future, how is it? 96.55. No, I don't know. Okay. Yes, around 96. Oh, yes, I bought a future trade. Yeah, thank you very much to recollect it. Yes, I bought it at 96.52 and sold it for 96.56. This is a Nifty future trade. So why I did this is because there was not movement of options as such. At some point of time, uh, I uh, I take a future trade because the future is moving. The futures is moving. However, the option is not moving that much. Okay, at some point of time options will decay its value. Okay, at that point of time what I will do is I'll take a Nifty future trade. So that is the time when, you know, Nifty future trade, I need around 51,000 rupees to buy one Nifty future trade. However, with option I only need around 60 to 6,000 to 10,000 rupees for buying one lot. Okay, so Nifty future when it is moving, then I take Nifty future trade only. Okay, so it is surely possible to take on Nifty future. Yeah, Amit and Amit gave me the right levels, 96.52 and to 96.56. Yeah, I collected. If I collect right, yes. Thanks for following the blog, and yeah, it will help you as well with technical analysis. If you don't do any technical analysis as well, I will give you the updates on the blog. So the live trading will surely help you. Till what date we shall be doing scalp trading in options? Um, I don't understand your question, Pradeep. Could you rephrase it? Yeah, every day you'll be taking the options trading every day. Okay, so you will not be doing anything else other than Nifty options. If the Nifty options is not moving much, then what you will be doing is you'll just be taking the trend calls, which I'll be teaching in the next class. Okay, so you will do it on every day, and all the days you will not be trading in futures. Can we apply these indicators to trade Nifty 50 stocks also? Narendra, it is surely possible. However, you have to have volatility and it has to respect the support and resistance zones. Okay. Previously, I had shown you one chart probably. Just a minute. Let me open one of the charts. Mm, I am looking for that particular PDF document. Give me 1 minute here. I am really sorry, guys. This was a very important session, so I had to take so much of time, and really sorry for that. Um, yes, Pradeep, if I have answered your question, you will take the options trade on every day. Uh, there is not one day you will not be taking it. Okay. So probably in chart patterns, candlestick strategies. I showed you. No, not candlestick strategies. Chart patterns. Okay, it is in the introduction which we were talking about. Introduction of chart introduction. Okay, chart patterns. Let's check the support and resistance zones. Okay, so this is what I was talking about. Probably is my thing. Okay, so I found that where I was talking about the support and resistance. When you can't make out the support and resistance, it is useless that you employ on any of these. Okay, so this is the support and resistance chart which I wanted to show you. Okay, so yes, Narendra, you can check this particular chart pattern. If you check it out, you really can't make any trend out of this. Okay, there is barring of all the bloody trends possible. Okay, it is not actually having any trend as such. So the moving averages, it is going helter skelter. The 100-day moving average, 200-day moving average, it is barring it downer, it is going higher. So you if it actually follows the support and resistance zones, and if it actually goes by 20-day and 21-day moving averages, it takes support at those zones, you sure can apply these indicators to anything, not only Nifty 50 stocks. Okay, I trade this on natural gas, I trade it on crude, I trade it on bullion. Okay, I do it for all these things. Okay, so this is not just for Nifty options. Nifty options gives us really high returns. That is one of the reasons I employ Nifty options to take trades when these patterns emerge. Okay, so it is surely possible for any indicator when any underlying asset when it follows the chart patterns. Okay, um, Indranath, max max with how many lots we can trade? Okay, Indranath, um, I have always traded with 4 lots. Okay, on any point of day, my exposure to the markets will be around 4 lots, around 30,000 rupees. I don't go above this. I don't go below this as well. Okay, so usually why I keep that 4 lots is because when I have 4 lots, it is very easy for me to take the trades and make faster trades. Okay, when it has more than 4 lots, what happens is the slippages comes into picture. I'm not sure if you understand slippages. If you don't understand, just let it be. If you understand, you know, you will see that you probably don't want to take more than 4 trades. Slippages comes into picture after the 4 lots, and it starts affecting your account book. So if you buy 4 lots at market, you may have one buy at 65.50 and one buy at 67.80 or something like that, when it is when it is more than 4. So at that point of time you will not know at what point I have to sell it. Okay, you will have to wait for, you will have to take averages of all the 4 buys, and afterwards make an average. At this point it is this is the break even, and afterwards sell above the break even. And if that is the case, you will hardly make any money out of it, you will lose it. Okay, by the time you do all these things, all these calculations, your the market would have moved ahead or lower. Usually, I very recently answered one of the questions on Quora. Uh, when I buy the stock, the market will go down. When I sell the stock, market will go up. Why is that? That is because market does what it has to do. Okay, so you can't go against the market and say that it will go the same way as every time. Okay, you have to go with the market. By the time you do all those things, it would have slipped from from your hands. Okay, though you are the fastest, though you are like PT Usha when you are selling, it is not possible to catch up. The market would have done the disaster what you were not looking for. Okay, so more lots you can't trade with this particular thing. Okay, with Nifty futures you can trade, however you need higher exposure. Okay, um, I went to about 10 lots in Nifty futures, and thought that okay, I can trade only with Nifty futures. However, I see that I am making more money out of Nifty options when I am trading with just 4 than Nifty futures. Okay, the slippages comes into picture, and you will hardly understand that you are making money. Okay, after you have to keep on looking for the end of the day when they send the contract, and afterwards you have to see how much money you have made. You will not get a clear idea about how much you have made. Okay, that is what it is. So near the expiry all the options become zero. Will there be different strategy near expiry? Okay, uh, it is not true that all the options become zero. Okay, so deep out of the money goes into zero. That is what it is. Okay, so if the market is closing at 9,600, and the puts of 9,000 till 9,450 or 9,500 will go into zero. Okay, so I always I am not sure if I told you, I always trade in something which is between 50 rupees to 90 rupees. Okay, so 50 rupees to 90 rupees is the leverage for me. It means that I can trade within 30,000 rupees for all the 4 lots. I can trade with lesser amount of tax which I'll be paying for the government. I will be making more money due to the volatility in between these options. Okay, and I can trade with confidence that it is in the money, or at least at the money at the time when I am trading. Okay, so that is because I will always be switching. If the option goes below that particular price of 50 rupees, I will switch to the option which is higher, which is of higher amount, and I will trade with that. If it goes above 90 rupees, I will trade with something which is lower than 90 rupees, and I will trade with that particular thing. So when you are taking only intraday trading, this is only about intraday trading. When you are only taking intraday trading, you don't have to worry that it will go to zero. Okay, in one day it will not go to zero until unless you are taking some trade, some penny option trade somewhere around 10 rupees or 5 rupees, and afterwards want to make 50 rupees out of that. It is not possible. On the expiry day, if you take such a thing, you will be fooled and it will go to zero. Okay, so that is what goes to zero, not others. Okay, in the money and at the money will not go to zero. In the money and deep in the money, at the money will not go to zero. Only out of money and deep out of the money will go to zero. Okay, so time frames, 5 minute or 1 minute, which is better? Should we keep different time frames, say 1 minute for Contra, 5 minute for Scalp trading? Okay, so I do 5 minute for trend trading. Okay, so trend trading I will let you know in the next class. As of now, 5 minute is applicable in trend trading, however not in scalp trading or not in the contra trading, because you have to have a clear picture about what is happening in the next minute when you are in the scalp, when you are scalp trading. Okay, when you are doing contra trading, even second to second matters. Okay, sometimes I will take a buy and get out of the trade within about 3 to 5 seconds. Okay, so within that time I will just get out. So if I have to wait for 5 minutes for one, one candle to emerge, then I would have already lost it. Okay, contra, you never can take 5 minutes. In scalp you can take 5 minutes, however it is a bit risky. Okay, so if you are really aggressive trader than me, you can take it. However, I don't suggest going for 5 minutes in scalp or with the contra. Okay, trend trading, yes, 5 minutes is applicable. I'll show you that 5 minutes chart in next class. So 7:30 guys. Okay, I am I am really sorry that we are taking till 7:30. However, I am really happy that you are still on and asking questions, and I am really happy about it. Right. So, any more questions?